Mark Richey, managing partner of 1809 Capital. Thank you for coming on the First 100 podcast.
Thanks for the opportunity. I'm excited to be here.
Now, Mark, we've had conversations about your career before at 1809 Capital. So, if it's okay with you, can we go a step back and can you give us just a framework for your professional career before 1809?
Of course. So I have been in tech and innovation my entire professional life since graduating from Miami in 1980. It's a very long time ago, but I was a computer science major, so I was a coder to begin. After a couple of years, I actually got into the kind of the customer side of the go-to-market side of technology because I developed a product and the company I was with just said, well, "Why don't you take it forward and market it and sell it, to our target base?" So I got to the business side after a couple of years and never looked back. Right, I was always in tech and innovation. Went to another kind of early stage company that was acquired. That then triggered me an opportunity to go back to business school. Went to Northwestern Business School, and then from there I went to the West Coast and was in the Bay Area through the 90s, in a series of, so I was with a venture-backed company that got acquired by a large company that was public. And then I went to another startup that got acquired that was a substantial company. And it was really building my network, right, of Bay Area. And it's fascinating to me to see how that still applies today because, the old guys are still at the core of what's happening in the Bay Area in many ways. And eventually started my own software company, right? And longer story, not worth going into, but our first child had been born in the San Francisco area. We moved back to Cincinnati and launched my own software company, kind of a classic case study. We had individual investors, venture capital investors, had corporate investors. It was in the call center software space. We were really early into this whole idea of SaaS business model and software as a service business model. And then exited in 2002. I then went to the investing side of the table. So I'd been operating all that time, and then joined a venture capital fund called Draper Triangle Ventures, which was based in Pittsburgh, but it was an affiliate of a large fund in the Bay Area called Draper Fisher Jurvetson. And that was like postgraduate education on how to be a VC. Really fascinating experience, being able to spend kind of in the heartbeat of whatever we call Sand Hill Road, and literally the DFJ offices was on Sand Hill Road. So that was a great experience, and started then 8 years later started my own fund called West Capital, and and that went pretty well, and we roll up those experiences. And in the middle of West Capital, I was kind of re-engaged with Miami, and I had started using Miami interns at West Capital, so I got to know the entrepreneurship department, got to know the chair. And they started kind of developing this concept of a Miami alumni venture fund to support Miami entrepreneurship, and really a vehicle to engage alumni that were in venture and innovation and in technology in some way, to have a kind of more formal way in which they could re-engage, and support, students from from advice, counsel, mentorship, internship, career opportunity. And so it was, and so I got kind of in the cycle of iterating on that. We had a really important sponsor, a guy named Jim Ryan, who you may know well, recently retired, a few years ago, retired as chairman and CEO of W.W. Granger in Chicago. So that's obviously a global 100 company. And Jim was a Miami grad, same year I graduated. Obviously our paths didn't intersect because he's, a large corporate person and I've been in the trenches of early stage companies. But that was an opportunity, he wanted to talk to me, which was of course a great opportunity, and really picked my brain about, I was really negative at first on it. It won't work, right? Because it has to make money to be sustainable. And it was initially focused on just Miami founders, but then we did some research on other models and came up with a model that works. So that's how all it's kind of never could have predicted it, but it all kind of, in a very kind of winding way, you take all those previous experiences and all add it up and being able to kind of re-engage at Miami and also take those experiences and develop a platform that we're really excited about. And because we when we first talked, we were just getting started, and we've made really great progress in executing on the strategy over the last 4 years.
Yeah, and when you look back at your career, I mean, with your major and then the business school, pivoting in
Right.
that, then getting into tech, and then working with both sides, then starting your own company, and then starting your own fund. It, was it a strategy that you had laid out, or it's just kind of you went point to the next and kind of knew that this felt right?
I, it'd be interesting. I mean, you're talking to people about the first 100, in your this podcast, and it'd be interesting to me to hear, kind of as you get more data points, right, with these conversations, how many people actually plan to do what they're doing. I suspect in most cases it wasn't a well thought out strategy they had for their career to start something, but in my experience is the best startups, the best ideas come, they happen to you. It's not necessarily an overt thing that you are planning, that you're just really planning to do. You're developing experiences, you're in situations, and the light bulb comes on. It's like, wait, this is something that I think is of real value, that deserves to be developed and taken to market and and scaled, right? And that's been my experiences. I there's certainly a thread here because I'm very much passionate about the world of tech and innovation, and how do you identify really interesting solutions to really big problems and really big markets, and then put a team together in order to then execute on solving that problem. And then all the other aspects of then you know then how do you best go about funding that opportunity, and which then helps you grow and take the next step and the next step. And there's all different ways to fund, right? You can some businesses are cash flow based, right? You can fund them through the initial revenue that you're generating. In my world in technology, usually there's a pretty long development cycle before you start generating revenue. Because you're developing technology, and you're getting initial users, and you're getting feedback from those users before you can really start to scale the business. So that typically means you need outside funding, to get those ideas off the ground from a technology startup perspective. So that's even been a narrower part of the startup world that I've been involved in. I'm not sure why I selected computer science back in the beginning. Could have never predicted that technology would be such a significant part of our economy that it is today. Infinitely thankful that I did, because it's been at least for me, it's been a really interesting career. Kind of overstated way, I get to see the next new thing every day, right? And whether it was on the operating side, being in the Bay Area during an amazing run up to what we're hearing about today is the dot-com bubble, because we're comparing our AI bubble that we're in today. I don't think it's a bubble, by the way, but there's people comparing that to the dot-com bubble, which there's really no comparison. But I got to live through that, and tremendous learning, and then get to be able to do it as an investor. So the thread is I've always been involved in the next new thing, either as an operator or an investor, and that's almost becomes like a drug that you just keep wanting. You keep seeking that type of adrenaline rush, in a sense. It's ridiculously risky, because there's been as many failures in that path as there, and you hear that all the time with founders. Like, I failed 3 times before I figured out one that actually worked. I certainly had failures. I can, if I was looking at my balance sheet, I've probably lost more money than I made, during this time. But I wouldn't give it back, right? It's a fantastic experience. So, I'm a personality type that just isn't, I'm not the personality type for a large corporate environment either. Although I work very well with them, it's just, I think I naturally, gravitated towards building new things. in a less structured environment than a corporate environment.
Right, and it's the world that you live in is a very specific niche of people thrive in. And
Right.
so when you connected with Jim, and I know we connected, it was the beginning of 1809 Capital. Can you just kind of talk through how you started to build the team and how you started to
Yeah.
build, the funds and how you got Miami so involved from an investor perspective, from a student body perspective? You could just share that. I think it'd be really, really helpful for everyone to see how you need to
Yeah.
get.
That's super important. Um, so Jim, was, I mean, what really kind of connected us was that you think about, okay, I'm this startup person and I'm in venture capital, and that seems so different than running a $10 billion company, right? Like Granger, which is a kind of a core supply chain, large company solution, right? And uh, the and but what if you think about Granger, about you know if you know anything about them, like if you go back 40 years, it was a catalog, right? And corporations could use it to buy just about anything to help operate their business. And and it was salespeople walking in directly and with a catalog and making sales, right? And now fast forward 40 plus years, when Jim joined the company, it was 100% salespeople going directly to client to customer. 45 years later, it was 85% digital, and so that's an amazing transformation. Granger could have been obsoleted if they didn't aggressively go after kind of digitally transforming their company to deliver their solution, but in a different way and through different channels, right? So he experienced that, and he was very insightful and a lot of foresight, and had appreciation for the skill sets necessary, and required him to change out his team, right? Because there were traditional people in the company that just weren't going to adapt to, now we got to go digital. We have to have a different set of skill sets. We got to be faster at how we solve problems and how we deliver those problems to the market. And so he had to do quite a bit of transformation of his team. So he appreciated the skill set that I lived in, right? Which is always trying to solve a new problem and take it to market. He knew but he didn't have venture capital experience. He understood it conceptually, but not at an actual execution level. And so that's where we connected. And he said, I really think we should do this. Let's go figure out how we can put a model together that'll work. And of course, that now dictates you got to start building a team. So the next step is I went to a guy named John Gardner, who was a 30-year VC in the Bay Area, also a Miami alum, had collaborated in many ways. He runs Nokia's, venture fund in the Bay Area, and super successful, has 1.5 billion assets under management. And I said, John, I'd like to get your thoughts on this. And he said, oh, I know exactly who we should go talk to. So he had then somebody else he knew. This is how it works, right? Because when you're a founder, you start pulling the thread. You start making connections. You're trying to get feedback. You're trying to get referred to the next resource that can help you execute on what you're trying to do. So he had somebody that had done something similar with University of Virginia, UVA. And we really, we looked at a lot of models we didn't like. We really liked this model. And he was a close friend of John's, and had been a previous partner. So he was very open with letting us, kind of teaching us how they did it. And so we took that model and iterated off of that. And now now we were ready to get started. And now you're going to go raise money. So a venture fund is no different than a startup. You have to go raise money in order to, against the strategy you want to execute on the basis that you're going to, deliver an exceptional return to them, right? No different than putting money, Will, you're a wealth manager. They're, no different than giving you money, because, your clients want you to produce financial return for their assets, right? And you have a variety of ways you work to do that. Putting money in a venture fund is another way to do that, right? And you would argue it's a small percentage of their assets, but it's another way to do that. So we have to go raise money, and we're trying to raise money in a fund that has no track record, right? It's a new fund. So what's really critical is we had to put a team together that had high credibility. So, I explained my track record. John has even a more exceptional track record. We got another longtime VC in Cleveland to join us, another Miami alum. And then what really kind of really, lit the fuse on what we were doing is we got Kim Walker, who is one of the top 30 chief investment officers in the country. She had just retired from being the chief investment officer for Washington University's endowment, which is a $10 billion endowment. So there's maybe 30 of those in the country. She's highly regarded. She had retired. She was, we actually graduated the same year. So I knew her from when I was at Miami. She, she indulged listening to our story, and she got kind of compelled by it. But Jim was very instrumental. So having Jim as a sponsor, when you got a CEO of a $10 billion company that wants to, those calls typically get answered, right? So we leveraged the credibility he brought to us to get access to additional people that would then support the company. And if you talk to founders of any company, you're trying to put together the best possible team with the smartest people that have the right experience and skill sets to execute on the plan that you're representing to investors. And so to get Kim to join our team was a huge win. And then that enabled us to then start going to potential limited partners, which are investors in a fund, to represent our strategy of investing in early stage tech companies for the benefit of Miami. And so what's that mean? So we did it on a private for-profit financial return basis. So our number one objective is to deliver financial return to our investors. If we do that, when we do that, and we've already done that, then we can deliver impact to Miami. But the limited partners, they're getting a full financial return with no obligation to Miami whatsoever. Now, that said, they're all Miami alums that are investing in the fund. So there is a passion component to this. And they like being the opportunity to engage at Miami, but they're first and foremost making a decision on a financial return basis. And they then had to believe that this team we put together, could execute on what we were representing and deliver that financial return. In delivering that financial return, there's the subjective side of it. We developed an intern program where we're providing intern opportunities for students. We developed a mentorship program that helps students get access into subject matter experts and get career opportunities and get access to internships. And we've succeeded enough now that the way fund economics work is that the general partners, those four people I've described, they get a bonus if they produce a profit, right? And so, not different than if you meet your business plan, you typically get a bonus at the end of the year. Well, in our case, we have to have a positive financial return. So, if we deliver profit, in other words, if I invest 100 and I make 200, that incremental, that $100 of profit, the general partners get 20% of that as our bonus. Now that in our industry is called carried interest, but it's just a profit bonus. And then the general partners gift 60% of that to the Miami University Foundation. So there's financial impact, and there's mentorship impact, and there's intern impact that 1809 Capital is delivering to Miami. But the only way we get to do that is that we are able to source really, top tier investment opportunities. And we do that through leveraging the Miami Alumni Network as well. So we go out to alumni that there's about 30 other venture funds in the country, actually 35, that have Miami alumni that are that are like me, they're general partners in those funds. And we ask them to let us participate in their portfolio companies. In other words, so when their companies are raising another round of capital, so these are highly vetted companies. They've been through a pretty extensive process. These are very successful venture capitalists that we're partnering with. We've negotiated an allocation into their portfolio. The portfolio companies themselves don't have to have any Miami connection. except for the fact there's an investor that went to Miami. So that opened up our funnel pretty wide and gave us access to really exceptional opportunities. As in just this past summer, we made our first gift to the foundation of $500,000
That's so.
to support entrepreneurship in Miami. So that really opened a lot of eyes because you think, 4 years ago it was hypothetical. We went heads down, did all the things startups do. We built a team of the highest credibility people we could put together. We had to build an operational, discipline. We had to build an operational structure. We built an internship team. We developed that all along the way. Super proud of, we laid out a roadmap and we've executed it almost exactly as we envisioned it from 4 years ago. And we're very intent on ensuring that the team that we put together was experienced, had successful track record in venture capital, and was credible. And really, I'm excited with the culture we've built. And that's another aspect that's a soft skill, right? Is then you got to once you put all that together, how do you develop a culture of how you operate? And I can't tell you how much fun it's been because, the proverbial, you always want to work with people you really want to work with. And also you want to be in a room where you're not the smartest person. And that's clearly the case for me in this case, but just great people that we've been able to engage in this, which that all adds up into being able to execute effectively as well. So that's where we are. So we're now, so I'll stop there. So I know you probably have another question.
Yeah, it's been really cool to watch the journey. So what do you envision as like the next chapter or chapters of
So we got to go from a demonstration fund to a sustainable platform. That's the key because we think the first fund was a proof of concept, relatively small, $7 million fund. We've built a great portfolio of 15 investments we have 4 unicorns that are in our portfolio. All of them are on a path to go public. That's almost crazy unusual for a $7 million first time fund. But that just speaks to how we've been able to, the quality of the team and how we've been able to build relationships, leveraging the Miami Alumni Network to get access to those opportunities. So we're pretty excited about that portfolio and the outcome that it's going to produce. But we're fully invested. So now we have to move to the next level, which is to take this from demonstration to sustainable platform. So we're now raising a $50 million fund that's executing the same strategy, just going deeper. And what I mean by that is, I describe how we co-invest with this network of venture funds, and that's on a relationship basis. We're going to move to where we're going to kind of deepening that to a business relationship. So there's an aspect of venture called a fund of funds. We're going to, of the 50 million, 35 is going to be allocated to a fund of funds strategy where we can be a limited partner. We can be an investor in our target market of these 30 funds in a subset of those that we do pretty extensive diligence on. But because of the relationship, we're going to get into top tier funds at less than what their normal minimum investment is. And so they're letting us in almost like on a friends and family basis. But by being an LP in the fund, we get even better access to their portfolio companies because they all have co-investment programs for their limited partners. So now we can, we now have we get a higher priority and get higher priority of access into their portfolio companies. Where before we were sort of like, okay, there's still capacity here, but now we're like we get first look now. And so that's going to really enhance. So our direct fund, which we only did direct investments in actual companies in the first fund. We're going to double the size of our direct fund to 15 million. And that's going to, we're just going to, and the opportunities for that fund is just going to be so much, is even going to be more enhanced because of this kind of complementary fund of fund strategy. So we've just got, started on that and we're excited. We're already in diligence on about 3 funds that we want to participate in that we co-invested with, in our previous fund. And, we've got, so we're just about, we've got all the infrastructure in place now to launch this next fund. And that's what we're really heads down on at the moment. If we get this next platform raised, then this will be a sustainable, there'll be a fund 3 and a fund 4. And over a 20-year period, this could deliver up to $15 to $20 million to the Miami University Foundation. So that's meaningful, right? Plus the impact on students. I mean, the number of internships we're going to generate, it could be up to 400 or so internships over the life of the fund. It's just, and then the mentorship program that we have is going to be exceptional as well. So really excited about where this is going. We are collaborating. We continue to develop a close collaboration with the Department of Entrepreneurship and with the foundation and the faculty. So that's, I think they've come to appreciate that, we're committed to doing this. And it's all alumni developed, all alumni run. It's private, but it is, it is focused on financial return, but resulting in high benefit, high impact.
Yeah, that's what I just keep thinking about is the bigger, the more impact potential that's out there with the university.
We're scratching the surface on this. It's really,
Yeah.
but what's fun for it's pretty unique, right? You'd struggle to find another kind of collaboration like this and another platform like this, in any other university environment in the country. I mean, obviously UVA has one, right? But we're not aware of any. We know some. I've probably had a dozen calls. I got another call next week with a university that wants to kind of understand how we did it and how it works. And it's tough to get the stars aligned because just that description I said of how we built the team to do it. That's not straightforward, right? And I'll give Jim great credit. Jim Ryan, he would having his sponsorship, having his credibility attached to it, enabled us to then build the rest of the team.
Yeah.
So.
It really helps Miami stay ahead on technology and innovation, providing opportunities for students in an ecosystem.
They've grown to be a top 7 undergraduate entrepreneurship program in the country. This is just taking that even accelerating that forward, right? Just because of the resources and assets that we're making available to that program and to the students. And the cool thing about Miami Entrepreneurship, even though it is technically in the business school, they half of the students that take entrepreneurship classes are not business school students. They're from every major, so it is a cross interdisciplinary program, which is, that is entrepreneurship. I mean, founders typically, they're the scientists, they're the engineers, they're the computer science people, they're even they're the poets, right? They're the English majors, but they have ideas and they seek to solve problems, and then the business people help them execute on that, right? So so it's impact for the full school.
Right, you bring all those different perspectives aligned,
right,
and it helps solve big problems. So I want to get your perspective on some rapid fire questions, if that's okay with you, Mark. Okay, so you mentioned you graduated in Miami 1980. Imagine you're a freshman now. What are you getting involved with at campus, and what are you majoring?
Today?
Yeah, today, if you're a freshman.
Computer science. Still do it. No question. Even, more committed to it now than ever. I know there's a lot of hype out there, or a lot of, debate about the impact of AI and what it means, in terms of, job opportunities. There is some impact on entry level coding. However, we're not seeing any decrease in coding, in engineering teams, software engineering teams. We're certainly seeing the productivity of engineering teams go up substantially with these tools. So I think, there's just, enormous opportunity with, having the skill set to effectively utilize technology to achieve these potentially productivity benefits that, current technology is providing. And a lot of that goes into what we're seeing in the growth of the economy, the growth. I know, Will, you probably look at the stock market like, is this thing, can it always go up? Is it going to go up and to the right for a long time? I do think, it's not going to be a straight line, of course, but we're in a transformational time, in a very unusual time, where there's just this amazing, and there's a lot we don't know about it, But if, for me personally, I want to be in the heart of that. And so I would be in a technical skill set, whether it's engineering, whether it's computer science, whether it's physics. Of course, with physics, you got the coming advent of quantum computing. So the better you're able to be capable in that discipline, that that's next. Frankly, I would, in the other areas in when I mentioned the sciences, the engineering, and the physics, is that the space economy is one that's rapidly emerging as well. So I want to have the skill sets to be, to have a chance to participate in those, in these rapidly growing areas. I can go, then I can though either I can experience the business disciplines I need, or I can always, you can do what I did, is go back to business school at another point in time. But I really want to have the skill, the technical skill sets is what I want. So.
Do you think with like Red Hawk Ventures and those clubs, would you be like you'd be going up to those booths right at the club events?
God, that's a great question. I was so unaware when I came to Miami of all those types of things, because that just wasn't the world. I don't want to get in. That wasn't the foundation of the basis of my family or my experiences growing up. I was more from just a basic manufacturing, kind of environment. And I don't, if it would, assuming that I was coming from a similar background, I would not have the awareness necessarily to, to go, to go after those clubs. That said, if I did have the desire to be in technology in some way, I would be quickly made aware that, because venture capital, if you think back 1980, it was like this small little club that existed in just the Bay Area, and maybe in New York and Boston, right? But really, really clubby, really small. It has grown so significantly, and it's such a significant part of the economy now. Just digital transformation, digital technology. So it's, the cliche is that every company is a tech company now. It's just become such more of a substantial part of the economy, much more visible part of the economy, that I would have been quickly made aware of it. I think I probably would have been drawn to it, because that's just what excites me. So.
And if you were a college senior right now, about to graduate, and you got your resume out there to a number of different places, what are you doing to stand out? Any advice that you give?
If I got my resume to say again,
If you're looking for your first job out of college, you got resumes out there. What are
yeah,
you doing to stand out from the pack of resumes?
college has become so vocational. I mean, it's, these students now come in and they're seeking internships from day one. And in my day, we were like, we were like wandering around, didn't have an idea what we wanted to do or where we were going to do it. I did end up having an internship before my senior, super helpful to me. I think that model still plays. You need to seek real world experience in to complement the academic experience you're having. And most universities now are really prioritizing experiential learning, and certainly Miami is. So I think the more of those experiences that you can accumulate and benefit from, the more your resume is going to stand out. And it's just it's the way of the world now. You need to go get experiences. We talk about well, so go get experiences. If you're going to be a coder, go get experiences coding in internships, so that you're not an entry level coder when you graduate. You're now a senior coder, and that's going to open up more opportunities for you.
And then on the personal side, what is a hobby that you have that people are just kind of shocked by? Is there anything that comes to mind?
Oh, I'm a really good cook.
Oh yeah?
I love cooking. I mean, I like to play golf too. Cooking is a hobby for me. It is a stress release for me. The end of the day, I'm like, oh, God, I can't look at any more, emails or any more, business plans. I just go down and make something. And it's that, it's like you get an immediate return on your effort. And I've gotten better at it. I really almost like my cooking better than anything else. Like go to restaurant. I like going to restaurants like everybody else. I'm like, yeah, it's pretty good, but I like, I've gotten, I like what I do. So I know that's a very arrogant statement. Like I'm a really good cook. I'm a pretty good cook. So
If for the listeners, Thanksgiving is last week, so next year I gotta maybe keep my eye out for.
I did the whole dinner. I did the turkey. I did the stuffing. We had a fancy Brussels sprouts thing and a fancy carrot thing. So I'm anti casserole. I don't like casseroles. So
Gotcha. Okay, so you're eating good over there. All right. So
it was pretty good.
the last question I have is okay. So obviously the involvement with Miami has been very very impactful in many different ways. So who has been someone that you've got connected through Miami that you didn't think you would have otherwise got to meet? I know you mentioned Jim. Is there anyone else that you
Oh,
just
there's so many. But I just look at this. The easiest thing is to speak to the team that we have. So to have John Gardner and Kim Walker, to have that opportunity to work with them has been fantastic. John has been a colleague, a collaborator for really important in my journey over the last 30 years. And that's Miami based. My freshman roommate, Kevin Randall, who is now he is a member of the fund. He's our in-house counsel. He was one step ahead of me. He was way smarter than me. He pushed me. Um, he went on to Michigan Law School and was a partner in a fund. He ended up being one of the top M&A, one of GE's top M&A attorneys before he retired. And now now he's supporting 1809. He's been really instrumental in my journey as well. Gosh, it's kind of a Miami combination Evan Scholar story as well. That was a life-changing event to be an Evan Scholar that enabled me to go to Miami, that introduced me to a network of people that's been really, really influential. We all have branches in life, and that was a really important branch for me. I would call out John, call out Kevin, Kim. I've got a lot of other Miami friends too, but and they've been involved in one way or another. Oh my gosh, we're way over time. I'm sorry.
Well, it's okay. And it's the Evans and Miami connection connected us too, so it comes very full circle, right? Well, thank you, Mark Richey, managing partner of 1809 Capital, for coming on the First 100 podcast, our first venture capital guest. So thank you so much for coming on and
My
taking.
pleasure, my honor, and thanks, Will. I really appreciate the opportunity. Have a good evening.